Well, welcome, folks. Another edition of our monthly webinars. Today, our focus for the webinar is going to be transaction talk. So, the idea, I think, is talking about what makes it for a smooth transaction with Silver Hill Funding, what are some typical issues that may come up, and how we resolve them. Okay? So, that's me, Juan Barcelo. And I head up the sales team for Silver Hill Funding. And Zach is with me. Zach, welcome.
Hey, Juan. How's it going?
Good. And Zach is our marketing director, and he puts together these fine presentations. So we're going to be talking to you today together, and Zach will give you some information towards the end of the presentation about our website and how to interact with us. So our agenda, the importance of a smooth transaction. We're going to talk about our process after that. And finally, some of our product offerings that we do here at Silver Hill. So the importance of a smooth transaction. The reality is, in every lender that we look for in this business, obviously, or even brokers on our side as a lender, we're looking for folks that are going to be professional, that are going to be accurate, and that are going to submit, quality files in order to make the process smooth. I mean, that's kind of we want to close the loan, but most importantly, it should be a smooth process. So we have some stats up here for you guys. Ongoing efforts to reduce closing turn times is extremely important. This is obviously what top performers feel. The underwriting department ability to meet deadlines is extremely important as well. And I think that's more fulfillment than anything else, but in general, underwriting happens to take a big part in that. So these are some figures for you to consider how important it is for the process to be smooth, and some of the things that kind of come up along the way that make for a rough process in the mortgage world. So, some common issues with CRE transactions. One thing I'd like to state, obviously, is that a commercial real estate loan is very different from a residential real estate loan because it is not as standardized. There's not the same documentation. There's not the same processes from lender to lender, from broker to broker. So every file indeed is unique, and processes change from lender to lender, from broker to broker. Documentation requirements are different all across the board. So, too many moving parts, obviously, unclear responsibility, who's responsible for doing what, workflows that don't really work, delays that are unexplained. There's too many people that you talk to, too many emails, but nobody's communicating the right, solution or the right problem to solve that, problem. So the idea is all of these are big issues that come up along the way in a mortgage transaction. So in order to minimize these, the idea is to really think about each step in the process and how to eliminate these issues from each step in the mortgage flow. Issues stem from three overarching problems. Roles and responsibilities never clearly defined. The lender doesn't communicate requirements in a clear manner, and the broker and borrower don't know what to expect at each stage of the process. I would say with all the loans that we do in a month-in, month-out basis that yes, these three would be the most accurate reasons, Zach. And the reality is, when issues come up, there's never a conversation, right? I'm always favored a conference call. Get everybody on the phone together so that everybody can be on the same page. And we found that is one solution that really helps in alleviating some of these issues. So a famous quote, if you don't know where you're going, you might wind up somewhere else. And that's a good one, Zach. But yeah, that's really what happens. And really where we want to all end up is closing more loans and making a smooth process. But if you don't have a good starting point and an understanding of the process in general, yeah, it's not going to end up with a closed loan. It's going to end up somewhere else. That's true. Here's some more quotes. We want you to know where you're going with Silver Hill. These are testimonials from the kind of work that we've done here in the recent past. And the idea is to share the fact that for each transaction, since it's different, we like to apply a very common sense approach to communicating back to brokers, communicating solutions before calling with a problem. But the idea is really to, make it a transparent process all along where we have constant communication between all parties involved. So let's talk about the transaction itself and how our process works at Silver Hill Funding. We like to think that we have a pretty standard mortgage process, something that if you've done loans, whether on the residential side or the commercial side, is very noticeable that, it's a traditional process. So, we start with a submission. Here's where our account reps, our account managers work with brokers in, structuring loans, in identifying best terms, negotiating those terms, what's in it for the broker, where does the broker benefit, where does the borrower benefit from specific terms that are structured, understanding our underwriting when submitting files, and our documentation requirements. So after that step, we get to the LOI issuance and acceptance. Our sales team can usually issue an LOI within about 24 hours of submission. And they will go over with you, either your account rep or a sales associate will review the LOI checklist, the terms, and any other questions that you may have, and kind of help you through that step in order to get the loan into processing. That's the next step. So from steps 3 here, 4, 5, and 6, it enters processing world and the fulfillment world, really, with Silver Hill. We provide a conditions update within several days after receiving the file signed up with the deposit. At that point, a processor or transaction manager is assigned and will work with our brokers and our borrowers in getting all the documentation that we need to complete the file. At that point, the file will go to underwriting and review, and any final conditions missing, like insurance or payoffs or clean title, will be reviewed at that point, and finally the loan will move to closing and funding. And you have a transaction manager that's in charge of the file all the way through to closing. At the closing stage, then, you will get to work with one of our closers in finalizing the process through the title company, coordinating with the brokers and borrowers as well. So as we mentioned, the key players in every step. The originator, which is our regional account manager, okay? This is the person that you're going to talk to about terms, general underwriting, and general loan request eligibility, okay? We do have 3 different product options where we consider the documentation to be different based on pricing, based on product eligibility. So we do offer a full doc program, but we also offer light doc and no doc programs as well. There's variation in the amount of documents and the type of documents that we need, but usually we go off of this main checklist, which will be part of the LOI when the salesperson issues the LOI. So, some resources. Whenever you have a deal, it's good to run it by our pricing calculator to price it out, and then check with your account rep to make sure that you can understand, where you're pricing the loan, how you should be structuring the loan, and that your account rep can then help you through some of the underwriting and some of the other cash flow questions that may come up along the way. So a good resource is the pricing calculator and our application checklist, which is available through our website. So we always encourage folks to go to our website. We have all of our forms and all of our tools that are a benefit to our brokers on that website. So it's our main place to go. And Zach manages that, and he does a great job with it. So thanks, Zach. Forms. All of our forms are there. Usually we're going to need an application or a loan supplement form, depending on the type of application that a broker may have. Sometimes we get brokers that come to us with 1003s, or they come to us with personal financial statements, or they have a competitor's application. We will use those, but we will still need our loan supplement form completed in those cases. We do like to see property operating statements and rent rolls on the front end for our light doc and full doc programs. So the idea is, if there's not one readily available as the borrowers have, you can simply use our forms. And our forms, again, are all in our website under broker resources. So there are definitely different types of forms, but the ones most commonly used are the top, I would say top 4 of them, really are the ones that we really require considering our program. Here's one of our, one of our top salespeople, Eldon, and the one thing that he does well is obviously he deals with the challenging loan requests very well. He's been with us for many, many years, and we like to share what our own people think, and it gives everybody an opportunity to see our dedication to really solving the problem, making it a smooth process, really educating our brokers on what we do and how we do it. So the next stage is issuing the LOI and getting it accepted. We tell our salespeople that a closed sale is one in which we get the broker and the borrower to agree with our terms, sign up the documents, send a deposit, as well as any other documents that are required on the LOI checklist. So as part of that, you'll have involvement with the broker, the borrower, and our salesperson on the front end. And we encourage our salespeople to have that conversation when it's time to review the terms. Make it a conference call. That way everybody gets on the same page and there's no real surprises later on. So usually we get our loans signed up between 8 and 10 days, some even sooner than that. The idea is to get it into the process as fast as possible and as complete as possible. So during the conditions update, as I mentioned, the transaction manager will be assigned. We'll review the file, the documents that we already have, and then we'll give a conditions update in an intro email to the broker on the file. There you'll see what's still missing for underwriting to be completed and your title, order form or link, and some of the other insurance requirements that we have on our loans. So the conditions update is really critical to getting the loan started and processing in a very smooth way. The closing tip here is really the critical part, I think. The idea is if you have all your documentation required in before the appraisal gets in, it's really a quick turnaround after the appraisal is reviewed, which usually takes about a day or two to get our appraisals reviewed. So once title is in, once appraisal is in, if all the documents have been delivered, we're going right to closing. And we do close about, I think it's like 10% of the loans we close every month are closing within 30 days. So these are clearly people that have gotten us, a complete file early on in the process where, assuming no issues evolve in the title process, we've been able to close those loans quickly. We do get a lot of testimonials for our customer service. We will send out surveys to every closed loan to the broker so that we get your feedback. And we really do, as a management team, we are really involved in reviewing all the surveys. And we've learned a lot over the last 4 years about, how our service should improve, what kind of service we are delivering currently. And we're really proud when we get real strong testimonials, and we have many of them. I would say most of the testimonials, most of the surveys we get are positive. And we do get some real constructive ones where we are happy that we do because it helps us kind of, adjust our processes so that it makes, our closing process overall more smooth. So the surveys help us make it a more smooth process as well. Underwriting and review, obviously, Everyone's involved in working on finalizing the file. Again, the key is getting all the documents we need. One of the real things that slow us down is getting payouts from private lenders or other banks, getting insurance requirements accurately covered through insurance agents. Many of our loans we see that our borrowers are underinsured or not insured at all. And so that's a process that takes some time because a insurance agent needs to draw up or adjust those binders. So those items always do take long. In the underwriting and review process, we like to send out a pre-approval letter basically saying, hey, we've reviewed all these documents that we have. We may be missing a payoff, insurance, or clear title, but we are ready to go given these terms. Okay? If there's other documents missing from the borrower or a business entity review or something like that, those items will be on there as well. Finally, final underwriting. This is where it all comes together. At this point, we'll have an appraisal reviewed, we will have title reviewed, and hopefully your file, you would have sent in everything that we needed, and your file's complete. And so here, the idea is to put it all together and issue a final loan term sheet. And this is basically a review of all of the terms, confirming from the beginning of the process, through any changes in valuation or title issues that may have come up, that the terms are still the same and everybody's on board for a smooth closing. I guess I went over this checklist already, but basically, appraisal, insurance, title, entity documentation, certificate of occupancy, payoffs, and all the conditions. This is the critical checklist on the back end. Closing and funding. We do assign a closer on every file, and they will coordinate with the title company, the broker, and the borrower, when the closing is going to happen or any issues that need to be resolved at the closing table. Usually, I will say our closings go pretty smoothly. We have improved in the communication at that point because we did see some surveys that said, hey, we need more communication, and so we did. We changed, and people have given us since some great response to that. So our closer and our closing manager is in charge of making sure that to finalize the loan, everything goes smooth with your title company and with your borrower. One thing I do want to mention is we do pay yield spread with our products, but we do pay it outside of closing, and that will go directly from us to our brokers. So the only item that will be pending after a loan closing on the day of closing will be any yield spread or other promotional offers that we have. We pay those directly to our brokers, usually within a week of closing. Now, here's the important part for you guys, brokers. You can make up to 5 points with our loans, as long as they're under $1 million. Anything over $1 million, the cap is 3 points. But you can charge up to 3 points origination and up to 2 points in yield spread. Okay? And again, that yield spread portion gets wired or mailed or FedEx directly to our brokers outside of closing. It is not part of the closing statement. It is on our broker fee agreement that we have between Silver Hill and our brokers. And again, we do focus a lot on customer service, guys. In this business, there's a lot of competition, and the idea is what makes us stand out is our service to our brokers and our borrowers. That's really one of the things that we really focus on internally. We train on it. We talk about it. And again, we respond to our surveys as well. So getting started. I want to talk briefly about the products that we have. We talked about the transaction process, how it all works. Now, the idea is to really get an understanding of where you are in your journey with commercial origination and how that fits with what we're trying to do. We're an alternative lending solution for investors and small business owners, which means what? When people go to banks or traditional sources of finance or capital and they get turned away, those are the people that we want to talk to, okay? So this is a great slide because we always like to position ourselves between a traditional bank or lending institution and private money or hard money lenders, okay? We feel we fit in that middle range. We have bank-like terms, but we have flexible underwriting like the hard money, private money lenders do. We have options to documentation, which makes it, again, a lot more flexible than a traditional bank. But we're not charging the fees, the points, and the interest rates that the hard money lenders charge. And we also offer longer-term products, much like a traditional lending institution does. So we like to position ourselves probably a little closer to the traditional banks, but in the middle definitely between those traditional lending sources and private or hard money lenders. So who are the borrowers? The borrowers are real estate investors, folks purchasing, single families or duplex, triplexes, or even small multifamily properties, or larger investors that are buying, retail strip centers or office buildings. So we help these people because of the different documentation requirements that we have, the different products that we offer. Small business owners as well come to us for our cash out. We're able to cash out and provide working capital for many different kinds of businesses where they would not be able to get that amount of money at a low rate, similar to what we have outside of the banks. Those options for the small business owners are your fintech lenders, your payday lenders, those type of lenders that are going to tie up their bank accounts, their business bank accounts, and are going to charge them in the 20s and 30s as far as interest rates are concerned. And those are going to be also shorter-term loans. So the idea is we can provide a small business owner with working capital with a long-term, lower interest rate loan, and it makes it for a better financing, better cash flow positioning for them on a monthly basis. So again, our sweet spot is under $1 million, but we go all the way to $2.5 million. Our rates are as low as 5 3/4. We do issue a lot. Most of our rates, most of our pipeline these days is probably in the 6s, low 7s. As I mentioned, we do a lot of cash outs. It's half of our business. We do a lot of 30-year fixed, which is a newer product for us, but it's about half of our business as well. And why people come to us? They come to us for our pricing. They come to us for our high LTVs that we offer, and they come to us because we offer cash out on commercial property. As far as who we lend to U.S. citizens, permanent resident aliens, and legal entities. We do not lend to foreign nationals, and we typically stay away from rural markets, kind of sticking closer to the top 200 MSAs in the United States. So here's an example of a success story. I want to highlight a couple of things here. Broker compensation was a nice payday at $18,000. Our lender fees are $3,500 for every loan that we do, across the board. Okay? So we don't charge points. We want our brokers to charge the points. We're a direct lender. We service the loan, and we make money differently on these loans than other, so-called lenders. General rule: lenders typically don't charge points. If they're charging points, they're probably not a direct lender. Okay, but we charge only $3,500. The broker made $18,000 on an automotive refinance. And I want to bring attention to the story, right? So we recently helped an investor in Connecticut refinance their automotive property. We were willing to lend on a property type that many lenders deem ineligible. Not a lot of lenders like automotive properties, folks. But they also made it possible for the borrower to complete a transaction without ever providing tax returns. So what we did for this person is probably we used either our Light Doc or bank statement product. It was investor, so we probably used our Light Doc product. So we used the property's cash flow to underwrite the file. They were able to refinance their loan and paid low fees. Broker made some money. Great deal all around. Here's one closed in Georgia, $800,000 loan amount. Broker made $8,000. Again, our fees are low, $3,500. Borrower in Georgia wanted to refinance out of commercial property they had because they weren't happy with the adjustable rate structure. So they went with a 30-year fix. I mean, when we came out with 30-year fix about 5 months ago, we didn't think it was going to be as popular. It became half of our production. Okay, people love the 30-year fixed loan on a commercial property. They really do. Here's one in Oklahoma, multifamily, broker comp. Out-of-state borrowers. We get these all the time. A lot of banks and other lenders don't like out-of-state borrowers. We're okay with that. We have more flexible underwriting. Our philosophy is very different on how we look at these types of properties. So here was a loan we were able to do again on the 30-year fixed rate program, which is very, very popular with us these days. So what are the properties we do? As I mentioned, in one of the success stories, we do automotive, we do restaurants and bars, we do daycares. Those are 3 property types that are not very popular with the lending community. But we can do those. We like to do those. We do a fair amount of these nationwide. We also do multifamily. It's our most popular product, or property type, I should say, multifamily and mixed use. We can also do 1 to 4 residential investment in that tier 1. But we can do, we do retail, office, warehouse, self-storage, light industrial, mobile home parks. Our most popular property types that we see, multifamily, mixed use, retail, and office. And then we see a lot of automotive, restaurant, bars, and daycares, okay, because we do them. So that's the stuff we really like. Under $1 million, it's the sweet spot. What's important, too, about our program and to make sure you have a smooth process and a good success with us is to understand what we do, but also what we don't do. This way, it eliminates us having to say no. If you're sending us files that we can do, we love to say yes. We want to close loans. We want to make it a smooth process. So in the stuff that we don't do category, okay, we don't do raw land or agricultural properties. We don't do new construction. We don't do any environmentally sensitive properties like anything with a gas tank on it or inside of it. We don't do churches. Adult entertainment we won't do as well. Cannabis-related properties, this is a recent phenomenon, but unfortunately, federal rules have to change before we will consider that. And it's a big problem for a lot of these businesses, specifically out west. They really don't have anywhere to go to bank. Properties that need significant rehab, while we allow for a small deferred maintenance budget, less than 10% of the loan amount, anything that's more than that or that needs completion, is not rent ready, is missing walls, floors, or any health and safety issues arise because of its condition, we will not finance those properties. So that's very important to ask as a broker on the front end, is many times you're not, you're in another state, you're taking a call on the phone or through your website, and you don't know where the property is or the condition. It's important to ask what the condition of the property is. There are a lot of properties out there, folks, that are in need of rehab, in the middle of a rehab, and people are looking for funds, and the problem is there are not a lot of lenders that are going to take a chance on a property that's in such a condition. Finally, special use properties, marinas, ice skating rinks, golf courses, gas stations, obviously, movie theaters, car washes. These are all considered special use by us. We do have a question on there, Zach. Why isn't automotive considered special use? Great question. For us, it's not a special use property, so we don't consider it special use. This way we can offer financing across the country on it. So there are other properties, like I mentioned, that we do consider special use, and we don't do those. In the future, we may, change our mind and open up our product to do special use properties. But for now, we don't. And automotive doesn't happen to be one in our classification. So your full doc loans with us, you're going to get the lowest rates, obviously, highest LTVs. We do still have a property cash flow and a business cash flow minimum debt service coverage. So we're either looking for the business cash flow to carry the debt or the property cash flow to carry the debt. Either or, owner-occupied versus investor. Light doc, we don't require tax returns for light doc, but we do require either bank statements for an owner-occupied loan or rent roll, leases, and operating statements for an investor loan. We do have a new program called the No Doc Streamline, and basically that's for our smaller loans, $100,000 to $300,000. And what we do here is we don't ask for any documentation outside of a application and a credit report. Okay? And the idea here is that we're going to use market rents once we get the appraisal back to determine the property's debt service coverage ratio. As I mentioned earlier, we do 1 to 4 unit residential investment loans. Okay? We do them at a 1.0 debt service. They also only require an application and a credit report, and if there are leases in place, we'll take the leases. But they only require those 3 items to do a loan with us. On top of the $500 deposit, it's the best deal out there. So creating your online account. Zach, you want to talk about the online account a little bit?
Yeah, sure. Thanks, Juan. I think this is a great resource for you guys if you're interested in taking advantage of marketing resources, especially that already exist. I know you're so busy day-to-day with your files, it can be difficult to even think about creating a new flyer or a new product sheet, especially if you're interested in offering one of our programs, one of our products. We've done a lot of the work for you, but what we won't do is put our logo on it, put our colors on it, so you have the ability to customize it to your specific needs. All this stuff is available, and it's all totally free. I'd highly recommend you look into creating a free account online. When you do that, you'll also get instant access to our pricing calculator that Juan mentioned earlier. And we found that a lot of people enjoy using this either before they talk to our account managers or even on the phone with their account managers. They talk about it together. It's just a helpful tool to get insight into what kind of rates will be offered for a particular scenario. And before I kick it back to Juan, I would like to mention, too, that this presentation and the recording would be one of those resources available to you. But not only that, I know it can be difficult to remember to log in, create your account, whatever. So I'm going to email it to all registrants, attendees of today's presentation. So you can look for that email tomorrow, and then you can go back and watch this presentation at your leisure. So I want to make sure you have the ability to do that. So don't feel like you have to take so many notes right now if you're worried about that.
Thanks, Zach. Great information. And our website is really state-of-the-art. It's really future-looking, and the idea is we want to really make it so that it's a real resource for our brokers to help them with their business, to drive business, to understand our products, and to interact with us overall.
Oh, yeah, for sure. I totally agree. This next slide here is talking about our educational program. A lot of times we talk about professionals who are interested in learning about commercial lending, or maybe they've done it in the past, but it's been a while, and they have a lot of questions. So we notice that some questions get asked more than others. So what we've done is put together a pretty helpful educational course that's just delivered through your email inbox. And this will just happen every other day for 30 days. So you'll get 15 free courses on topics like how to source commercial leads, which is the most popular question we get, how to find the best lending source for your deal, depending on what kind of borrower, what kind of property, etc. What happens at each transaction stage, kind of the information we talked about earlier in this presentation, and then why borrowers need your specific help, especially when a bank has turned them down. So I think this is some pretty helpful content here. If you're brand new to commercial lending, we see that a lot. Or if you have done a few deals, but you'd like to learn more, this is a pretty good way to do that at your own pace. So if you see that URL right there, silverhopefunding.com/learn. You can fill out the basic form, and you get those emails right away.
And by the way, we have noticed that the people that have gone through these courses, they've actually ended up transacting with us. So they found value enough in it that it's helped them to drive commercial business their way, and eventually it made it to us. So if you're someone who's newer to the business, wants to learn more, or forgot stuff, I mean, this is a great way to get reacquainted. So, folks, that's our webinar for today. We wanted to really do, this is the last one of the year. We're going to take a month off in December, Zach. But, we like to put these together to talk about our products, to talk about our process, because we feel it's important. We also have one that's marketing focused that is actually recorded on the website if you want to look it up. And I'm sure next year we're going to be doing others that are more marketing focused as well. So we like to do these monthly, and the idea is make it an interactive thing where you can start doing business with us and interacting with us through our website, through our sales folks, soon after you go through our webinar. So thank you today for your time, folks. We know that you're real busy and trying to get the year wrapped up, really. So thanks again. We really do appreciate you spending the time with us.
Yeah, thanks, guys, and thank you, Juan, for the time. Have a great rest of your week, everyone.